Gold. Gold is up 45% so far in 2025 and a whole lot more since 2019. But how do we take our actual money and invest it into gold? Either personally or through a limited company. Firstly, should you invest in gold? That's a very good question, and that's what I covered in this recent video. So I'll link it down below and at the end if you want to watch it after this one. There are four main ways we can invest into gold. Physical gold, which could be coins or bars. Gold funds, which could be ETFs or ETCs. Gold mining stocks, or digital gold. And no, that's not Bitcoin. We're going to go through each of these, including their pros, cons, and tax advantages or disadvantages, and then at the end conclude on which one is best. Let's start with physical gold. This includes coins or bars, the good stuff, the solid stuff, the stuff you can hold in your hands. And that is the main pro of this physical gold. You actually own something tangible. This, of course, is the most direct way to own gold. Make sure, though, if you go down this route, you buy it through LMMA, which stands for London Bullion Market Association accredited dealers. A couple include the Royal Mint, Atkinson's Bullion, Bullion by Post. Then at least you know the gold you're getting is legit. Interestingly, gold coins like Sovereigns or Britannias have tax advantages. They are exempt from capital gains tax due to being legal tender. So these are great for people who want to invest into physical gold and essentially pay no tax when selling down the line. The cons, of course, because it's physical, you need to store it somewhere. This could be at home, which might be risky, or in a vault somewhere, which will then come with a fee. You might need insurance, and it's not very liquid because you literally have a physical thing that you need to sell if you did want to sell. If you are worried that the world is ending, this is probably going to be the best way for you to invest into gold. Secondly, let's look at gold funds, specifically gold ETCs, which stands for exchange traded commodities. These trade like shares on the stock market and are backed by physical gold. This physical gold is held in vaults and essentially tracks the underlying spot price of gold. The pros, it's easy to buy and sell, it's very liquid, there's no storage headaches, and very importantly, you can hold in tax advantage wrappers like ISAs and SIPs. Although it is worth saying, if you do hold these gold ETCs in general investment accounts, there are tax implications if you were to sell, once again, of capital gains tax. But holding them inside ISAs and SIPs, big tax advantages. The most popular gold ETCs are on the screen: SGLN, PHAU, and SGLD. The returns also on screen are literally identical, and just FYI, these are all accumulation funds. These are three of the most popular, actually, if not the most popular gold ETCs that are available to us as UK investors. The ones that are available to you really depend on what platform you're using, but on most platforms, all of these options should be available. SGLN and SGLD are the lowest fee at 0.12%. But SGLN from iShares, who are owned by BlackRock, is the biggest in terms of assets under management. So when you hear people talk about gold ETCs, this is normally the go-to option. So this all sounds good. What are the cons of this approach? Well, mainly you don't actually physically own the underlying gold. Plus, because these are funds, essentially ETCs, there are ongoing fees and costs associated with investing into the fund. There are also other ETCs available, gold ETCs from Amundi, X-Trackers, the Royal Mint. This isn't an exhaustive list. Just make sure any fund you use is actually physically backed by gold. Thirdly, and we're getting into an even more interesting option, gold mining stocks. Once again, these aren't invested in gold directly, but these essentially are companies that are listed, stocks that dig up gold for a living. So they're traded on the stock market and you can buy shares in these companies. The pros are much the same as what we went through with ETFs. They're easy to buy and sell, so they're liquid. There's no storage headaches. You can hold these stocks inside your ISA or SIP, so there's tax advantages. I put the biggest gold mining stocks on screen, and to be honest with you, a bit like gold in general, and probably because of gold in general, the returns have been great lately. What are the cons? Well, investing into individual stocks will carry a fee. All of the biggest gold mining stocks are listed in the US, so there will be an FX fee, and there may be other buying and selling fees depending on what investing platform you're using. Secondly, though, and most importantly, there is of course individual stock or individual company risk. So these stock prices are much more volatile to gold and can also move differently to gold. If you actually look at the biggest three gold mining companies, you can see the returns of the top three over the last 5 years are actually quite wildly different, which shows you that company specific risk. Just for context, the global stock market VWRP is up 84% over the last 5 years, and the S&P 500 is up 109% over the last 5 years. So it's a case of picking the right gold mining stock ahead of time, which of course, as you know, I don't pick individual stocks. It's very difficult. But if you can do that, you might be able to outperform the market. Fourthly, or maybe this is more of a 3B, we have a combination of the two previous options. Gold specific ETFs. Two options stand out, which are on the screen. Ticker symbols GDGB and SPGP. I'll put their details on the screen, but they both hold a similar number of stocks, have a similar number of assets under management, and have a similar fee. It's a similar story when we looked at the different gold ETCs. With these gold specific ETFs, the returns are pretty much identical, although it is worth saying, of course, the fees are much higher compared to gold ETCs and just general low cost index funds. Another option is this one I just flashed up on screen. This is more diversified. It includes 125 stocks, and that's because it includes other commodities like coal. Another interesting thing I stumbled across is this fund here, which is an ethical / ESG gold mining ETF. It is a much smaller fund. It's a tiny fund with only 60 million under management, and it holds even less companies, only 27, with a slightly higher fee at 0.6%. It has also performed worse than the other funds, but once again, it's just interesting when I was researching this video, so I thought I would share it here. Overall, these gold mining ETFs, particularly the first two we went through, which seem to be the largest available for UK investors, have higher fees than the gold ETCs. And most importantly, it's worth saying, these don't track the underlying spot price of gold. These are tracking gold related and gold mining stocks. And as we went through with those stocks, there can be a difference between their returns and the actual return of gold. Fourthly and finally, we have digital gold. There are services that let you buy fractions of gold digitally online. One of the most popular is DigiGold, which is offered by the Royal Mint, where you can invest into digital gold or DigiGold for as little as £25. The main pro, as you would guess, is much more accessible because you need much less to get started. It's very convenient as it's online. It's more liquid compared to physical gold, but it is still backed by physical gold. However, there are a few cons. There are not that many platforms that do offer this, and there's less regulation in this digital gold space. The fees in general for buying, selling and storing are much higher. With the Royal Mint, for example, it's 0.33% premium to buy, 0.5% to hold, and then 1% to sell. And the Royal Mint is one of the cheaper options. Other options include Tally Money and Bullion Vault. Capital gains tax also applies, so there's no tax advantages like with some of the previous options where you could hold the gold ETC, gold ETF or gold mining stocks in ISAs and SIPs. So there are the four options, and we've so far discussed how to buy them personally. How does it differ when you're buying for a limited company? To be honest with you, most of it doesn't differ. The only difference is when it comes to tax. So companies can still buy gold using all of these available options. There usually is a bit of more admin to set up though. Setting up a business investing account, then invest into a gold ETC or a gold ETF can take a bit longer than just doing it personally. The main thing to note is the tax is different though. Any profit from selling will be subject to corporation tax, and you pay corporation tax between 19 and 25% at current rates on the gain that you've made whenever you sell. There's no special tax advantages like CGT free coins like the Britannias. There's no personal wrappers like the ISA allowance or the SIP allowance. And this is why normally investing into gold for a limited company is usually worthwhile, either because you think it's going to go up in price and you got some cash just sitting there and you can make some money, or for some sort of long-term treasury diversification for some company investment. It's probably worth speaking to your accountant on if you're going to go down that route. So what is the best option out of these four? Ultimately, that's for you to decide. Personally, and of course, I'm not a financial advisor, I prefer the gold ETCs. Number one, and most importantly, because it actually tracks the underlying spot price of gold. If you're investing in gold, in my opinion, surely that's what you actually want to do. They're also low fee, liquid, and there's no headache of trying to store the gold or paying fees to store it in a vault somewhere. And you also can hold them similar to the gold ETFs and the gold mining stocks, but you can also hold the gold ETCs in tax advantage wrappers like ISAs and SIPs, so the gains are tax free. Which specific one? Well, once again, to reiterate, I'm not a financial advisor, but I'd probably go with the iShares option just because it's got a strong track record and it's the largest one. It's got the most assets under management. However, for full transparency, I don't personally invest in gold. Although it has performed very well in 2025, I do see it more as a wealth preservation asset rather than a wealth accumulation asset, which is why I personally don't use it. Even though the returns have been amazing so far in 2025 and in recent years, over the longer term, gold normally underperforms compared to stocks. Whether you want to hold a gold coin in your hand, a gold bar for a doorstep, or invest into gold ETCs or ETFs in your ISA or SIP, or a combination, there are plenty of options and different ways to invest into gold as a UK investor that you can use. The only question though isn't how to invest, but why to invest. Should you actually invest into gold? Gold doesn't pay income, but it might protect you when the market starts to wobble, which is why you should click this video here and watch my previous video on exactly whether you should actually take some of your hard-earned money and invest it into gold or not. Thanks for watching, and I'll see you in the next video. And if you've got any questions at all on anything gold related, leave them in the comments below. Cheers.